If you've ever felt confused about whether you need a will or a trust, and maybe a little embarrassed that you're not sure, I want you to relax, because in the next 10 minutes, I'm going to make this genuinely simple. By the end, you'll know exactly which one fits your life and what to actually do about it this week. Let me start with the one idea that unlocks this entire subject. The single biggest practical difference between a will and a trust comes down to one word: probate. Probate is the court process that happens after you die to validate your will and distribute your things. And here's why it matters so much. Probate takes time, often 6 months to well over a year, sometimes years. It costs money, commonly somewhere between 3 and 8% of your estate once you add up court fees, attorney fees, and executor fees. And it's public. Anyone can walk into the courthouse and see what you owned and who got it. Now hold that word probate, because everything else flows from it. Let me explain each tool plainly. A will is a document that says who gets what after you die, and who's in charge of carrying it out. It's the foundation of any estate plan. And here's the honest truth: a will does not avoid probate. A will is essentially a set of instructions you hand to the probate court. So your family still goes through that court process. The time, the cost, the public record, they just go through it with clear directions instead of chaos. But a will has one superpower that nothing else has, and I need you to hear this if you have young children or grandchildren in your care. A will is the only place you can name a guardian for your minor children. A trust cannot do that. If you're raising a minor and you have no will, a court decides who raises your child if something happens to you. That reason alone means many people absolutely need a will. Now, a trust. Specifically, the kind most people mean, a revocable living trust. Think of a trust as a container you create while you're alive, and then you move your assets into it: your house, your accounts. You still control everything completely. You can change it or cancel it any time. But because your assets are technically owned by the trust rather than by you personally, when you pass away, they transfer to your loved ones privately, according to your instructions, without going through probate at all. No court. Faster, cheaper, private. So on the surface, the trust sounds like the obvious winner. But hold on, because there are real trade-offs. A trust costs more upfront. A simple will might run $300 to $1,000, while a living trust typically costs $1,500 to $3,000 or more. And a trust only works if you actually fund it, meaning you have to do the paperwork to retitle your house and your accounts into the trust's name. A trust with nothing in it is a useless, empty box. And this is the single most common mistake people make. They pay for the trust and never finish moving their assets in. Now let me kill the biggest myth in this whole topic because it causes so much confusion. A lot of people think a trust is about avoiding estate taxes. For almost everyone watching this, that is simply not a concern. In 2026, the federal estate tax exemption is $15 million per person, $30 million for a married couple. Only about one estate in 1,000 owes any federal estate tax at all. So please, get that worry out of your head. For regular families, a trust is not about dodging taxes. It's about avoiding probate. The time, the cost, and the loss of privacy. That's the real prize. Okay, let's find your situation. I'm going to give you 4 quick scenarios. Find the one that sounds like you. Scenario 1. The straightforward estate. Say you're a widow named Dorothy with a modest amount in the bank, a car, some personal belongings, no real estate or a home that's easily handled, and simple wishes: everything to your 2 kids split evenly. For Dorothy, a well-written will plus good beneficiary designations, which I'll explain in a minute, is often completely sufficient. She likely doesn't need the added cost of a trust. Don't let anyone upsell you a $3,000 trust you don't need. Scenario 2. The homeowner who wants to spare the family. Say you're Frank and Louise, you own your home, which is the big one because real estate is what usually drags an estate through probate, and your main goal is for your kids to inherit smoothly, quickly, and privately without the court taking a slice in a year of everyone's time. This is the classic case where a living trust earns its cost. If avoiding probate on your house matters to you, the trust is very likely worth it. Scenario 3. You're raising a minor. Say you're a grandparent, Ruth, who has legal custody of a young grandchild. For you, the most urgent document isn't the trust, it's the will, because that's the only way to name who would raise that child. Please don't wait on this one. Scenario 4. The complicated family. A blended family with children from different marriages. A child with special needs who receives government benefits like Medicaid, property in more than one state, or a family business. If any of these is you, you're squarely in trust territory, and you need a real attorney, not an online form. One specific and important tip here: if you have a loved one with special needs, never leave money to them directly, even in a will, because an inheritance can disqualify them from their benefits. You need a special kind of trust for that, called a special needs trust. This is not a do-it-yourself situation. Now let me give you the tips and tricks that genuinely save families money and heartache. Tip 1, and this is the most useful thing in this whole video: beneficiary designations beat everything. Your retirement accounts, your IRAs, and 401ks, your life insurance, and even your bank and brokerage accounts can name a beneficiary directly. And when you do, that money passes straight to that person the moment you die, skipping probate entirely, no matter what your will says. Bank accounts can be made payable on death, or POD, investment accounts, transfer on death, or TOD. This is like a free mini trust built right into accounts you already own. So this week, go check the beneficiaries on every account you have. Make sure they're filled in, and make sure they're current, because an ex-spouse still listed on a life insurance policy will inherit it, regardless of what your will says. That one afternoon of checking is the highest value estate planning most people can do. Tip 2. If you do get a trust, pair it with something called a pour-over will. It's a simple companion document that catches any asset you forgot to move into the trust and sweeps it in. It's a safety net, and any competent attorney includes 1. Tip 3. Whether you choose a will or a trust, you also need 2 more documents that everyone should have, and they have nothing to do with death. A durable power of attorney which lets someone you trust handle your finances if you become unable to. And a health care directive, sometimes called a living will, which states your medical wishes and names someone to speak for you. These protect you while you're alive, and honestly, they're just as important as the will itself. And while you're thinking about the documents that protect your family, this is also a good time to think about the assets those documents are protecting, because a will or a trust tells people where your money should go, but it does not decide how that money is positioned while you're still alive. And for a lot of retirees, the bigger question is not just who gets what when I'm gone. It's, is my retirement money protected and diversified while I'm still here? That does not mean you should panic. It does not mean you should move everything around. And it definitely does not mean gold is some magic solution. But some retirees do choose to diversify a portion of their retirement savings into physical gold through a gold IRA, because they want part of their nest egg outside the usual stock and bond system, especially when they're thinking about inflation, market volatility, government debt, or the long-term value of the dollar. So, if you have money in an old 401k, IRA, or retirement account, and you want to understand whether physical gold belongs anywhere in your retirement plan, I'll leave a link below to a free gold IRA information guide. It explains how physical gold can be held inside a retirement account, how rollovers work, what the IRS rules are, and what questions to ask before moving any retirement money. Use it as a free educational guide and decide for yourself whether a gold IRA makes sense for your situation. Now, back to the estate planning side, because if you do set up a trust, there's one step you absolutely cannot skip. Tip 4. Fund the trust and keep it current. If you set up a trust, finish the job. Retitle the house, move the accounts, and whichever route you take, revisit your plan after any big life change. A death, a divorce, a new grandchild, a move to a new state. Now let me be honest and careful with you, the way I always try to be. I am not an attorney, and this is general information, not legal advice for your specific situation. Estate laws, especially probate rules and state-level estate or inheritance taxes, vary a great deal from state to state. 15 states and the District of Columbia have their own estate or inheritance taxes with much lower thresholds than the federal one. So your state matters. The right plan depends on your assets, your family, and where you live. So use this as your map, and then spend a couple of hours with a qualified estate planning attorney to put it in place. A simple, correct plan done for a few $100s is one of the best gifts you'll ever leave your family. Let me leave you with the number that matters most. Only about 1 in 4 American adults has even a basic will. That means most families are left with no instructions at all, forced into the slowest, most expensive, most public version of probate in the middle of their grief. Don't let that be your family. So here's your action step, and it's small. This week, do just one thing. Check the beneficiaries on your accounts. Then make an appointment to get a proper will and ask the attorney whether your situation calls for a trust. You now know enough to have that conversation as an equal. The peace of mind on the other side of it, knowing your family is protected and it's all taken care of, is worth far more than the afternoon it takes. You've earned that peace. Go claim it.